Copper prices are at their highest since September 2014. What's been behind the move? Where does it go now? And which stocks should we be watching as a consequence? John Meyer joins us now from SP Angel, where he's mining analyst and partner. John, welcome. First of all, the copper price at the moment, we've seen this surge in the value of copper. Why?
There's a lot of reasons why people are buying copper at the moment. You've got environmental issues within China. That's causing concerns about how much copper will be produced in China. Not really so much from Chinese copper mines, because there isn't much of that, but Chinese smelting companies, whether they'll be able to take in scrap copper for reprocessing, those sorts of issues. So what we've got is a situation where manufacturers are restocking. They saw that prices were low, traders are stocking, and everybody's looking to the future. We're saying, well, okay, huge growth in China in terms of electric bikes, e-bikes, and when we're not talking motorbikes here so much as electrically assisted pedal bikes, but also electric vehicles. And so there's a huge growth there, massive investment within China, and in fact new rules saying that Chinese auto manufacturers or any company producing cars in China is going to have to produce a certain proportion of electric vehicles and sell a certain proportion of electric vehicles in order to be able to carry on producing ordinary vehicles for sale.
Where does copper come into the process, or is it just about the usage of that and the recabling?
Well, there's a certain amount of additional copper usage in an electric vehicle, but where the cabling really comes in is where for the charging points at home. So you drive home, you drive into your garage, your drive, you need to have a cable there. For the case of Tesla, that's an 11 kilowatt charging station. Now, if you put it on overnight, that's a slower charging process. But we think a lot of people are going to have to upgrade their electrical infrastructure, and we think ultimately the grid system, wherever you are, is going to have to upgrade to meet future demand. So if you've got everybody in the street suddenly turning on an 11 kilowatt system, you're going to start melting a few wires. So and that can't be allowed to happen.
Okay, well let's look at this in the context of the copper price. If we can bring up the chart here, we've just got this going back to what, 2015 or so, but it goes back further with higher numbers. But anybody that says that at what, just shy of 70, we've got downside to come, you think that's not the case?
Look, it's always possible that the copper price might dip back on a short-term move, but I do think ultimately we're looking at copper prices going over $7,000 a tonne and continuing to run. I think copper is going to become a very strategic commodity, because you can't recable an economy, you can't recable cities in the United States, in the UK and in Europe without a lot of copper. Do you remember when there was a moment in time when British Telecom was considered to have greater value for its copper in its cables than it did for its telecoms business? It may happen again, actually. Copper, you simply can't re-electrify your economy without having the metal.
So we've got copper as an option for a long-term long trade. What about the individual companies that take the stuff out of the ground and actually provide us with the metal?
Well, the big companies, the standout companies are Rio Tinto and Glencore, and I love Glencore as a company. It's the company everybody loves to hate, I think, but actually for me it's very gutsy. They've got copper mines in risky places like the DRC, but they're very good quality mines. They play the local politics very well, I think. They've run copper smelters in Zambia and places like that, and they've got a broad portfolio of first and second tier assets which are good, which they bought from Xstrata when they acquired all of that. But they also have a second bite of the cherry, because they have their trading business, which was the core of Glencore years ago. And so generally when prices are going in this way, they do really well out of the trading and out of the mining too.
Let's bring up the Glencore share price, and if we take this chart back even further where we have it at the moment, it has been a lot higher than where it is at the moment. So obviously this is one that John likes. How about Rio as the other one you mentioned?
Rio Tinto, it is boringly solid, but it's a great company. So if you're not if you're a little bit more risk averse, but you still like the copper play, you buy Rio Tinto because it's a solid company. It's got loads of copper in the portfolio, and it will continue to do well, and it's relatively well managed. So that's quite good there. And you can go further down the spectrum to the smaller companies for copper as well.
Such as?
Well, Georgian Mining, which is a client of ours, is my top pick, and I think it's a sure growth company. It's going to produce some more numbers on its copper discovery in Georgia, of all places. I think there's a lot of news to come out of this, and they have a joint venture partner that actually has a processing plant just 7 kilometers away. So it doesn't need to raise a lot of finance to build a new plant. The project is very easy to get into. In fact, the surface stripping, the bit that they have to strip off the surface to get to the copper, that's got gold in it. So that will start to give them cash flow very, very quickly in order to then carry on drilling the much larger copper project and actually to develop that more fully.
You were talking there about Georgian mining in Georgia. This is the other problem, isn't it, with some of these large deposits that we're now seeing companies go for, is that like Glencore in the DRC, Democratic Republic of Congo, we know a lot about the problems that that economy and that society has there, with a lot of unforgiving activities with some groups. This is the problem, isn't it? Some of these assets are in very perilous parts of the world.
Often they are, and on the one case, going into a difficult and risky part of the world generally means your mining costs are lower, and it means you're able to get these things done. It would be difficult to develop a large-scale copper mine in Surrey, for example, because there'd be a lot of local opposition. Not saying that you couldn't do it, but there would be other issues to deal with. The interesting thing is a lot of the world's really big copper mines are starting to draw to the ends of their lifespans. And these guys are missing their targets. In fact, so far this year, mining companies are missing their targets by about 10%. That's 2 million tons of copper that hasn't been produced, that people expected to produce each year. And the big forecasting houses that like to do all this forecasting, they generally have junior chaps doing the job, and they take it for granted that if a company says it's going to produce 1 million tons a year, that's what they'll do. But of course, they're missing these targets. And having ramped up production during the last bull run, they've all been running at kind of a maximum rate, and that's not sustainable over a longer term period. So as the mines get deeper and deeper, and the production processes get slightly more technical, more complicated, and some of the machinery gets a bit older, then they start dropping the ball here and there.
The other point you mentioned was the fact that quite often geologically you get gold when you get copper. And I know another one of your picks is SolGold, which has moved away from its original, I think, target to now look at the potential for copper. Is that right? Well,
SolGold started its life in the Solomon Islands looking for large-scale copper and gold targets, actually. That didn't really work out so well at the time, although they might go back there again, I think. But they've gone to Ecuador and they picked up the Cascabel project, which has turned out to be a real elephant. It's a really, really big project. And the market cap, of course, realises that, 530-something million pounds for a project. They don't have a resource on it yet, but the reason is it's a big resource, it's a deep resource. They've promised to give us that number, I think, by the end of the year. And SolGold are a client of ours, so we're pretty close to this. It's a very deep target. It'll be a huge block caving operation. Newcrest, which is a large-scale Australian mining company, have sunk $60 million of cash into exploring the project on SolGold's behalf. So they own about 15% of the project, which is interesting because it's not a huge stake for $60 million. So all credit to SolGold management there. And they will have to make a decision as to whether they want to carry on putting money in and whether they want to develop this thing. But it's all going in the right direction. It looks pretty good for them, and it looks better than some stuff they've got elsewhere in the world. So SolGold and the Cascabel project may become one of the next generation of big copper mines going forward.
Let's bring the share price back up. We had it up briefly while you were talking, and we've seen it move from the recent highs of 46, 47 pence a share. Here we are now at 34.83. What you're talking about then is the fact that to generate some more heat in this stock, you've really got to go to the announcement later in the year from Cascabel. You think that could be the defining moment?
Well, we're going to continue to see results from drilling. They've got 11 drills on site, I think, now. So they've been quite slow in the past because they're such deep holes. They go from about 1,500 to 1,800 meters down. So you're nearly 2 kilometers into the Earth's crust. And it's quite tricky because they're using manned portable rigs. They're not like oil drilling rigs. These are small things that they're working with. And I think they've broken all records using manned portable rigs there. And so we'll get more and more news from that. But they've got to pull all that data together and consolidate it into a resource number, which I think will be a big figure. That will be helpful. But at the end of the day, it's who's going to sink the $1 billion, $2 billion, $3 billion into this project to make it happen.
That's always the problem, isn't it, for these small minnows, where to get the money from when it comes to facing up to the monumental task of actually producing the copper.
Well, for SolGold, yes. I mean, it's a much bigger project. So it has huge value, but somebody's still got to hit the button and say, yes, we're going to make this investment. And I think with Newcrest, they would, if they decide to do this, they'll bring in Rio Tinto, BHP, or one or two of the others. So it'll be a consortium approach. With something like Georgian Mining, because they already have the process plant next door, there's really very little capital that they need to add. In fact, if the project gets big enough for Georgian Mining, they may decide to build their own plant right on the site. But that's a good problem to have.
Yeah. Okay, all right. Look, John, it's a pleasure. Thanks indeed for joining us. John Meyer there from SP Angel with an update on the copper story, which looks like it could well continue to move higher, and certainly some of the stocks to watch out of a positive copper play.